Hey everyone, I want to react to all of these videos coming out about the exploding inventory here in Florida and even nationally. You know, inventory has actually went up. When you look at these headlines here, housing inventory exploding in Florida, housing inventory exploding in Florida, Florida condo fire sale is here, Florida's housing market correction has begun, top 10 cities where home prices will crash. You know, all of these headlines talking about what's going on here in Florida as far as building inventory. And the fact is, inventory actually is building. There's no doubt. We came up from just like a half a month to 1 month's inventory to over 4 months, 3 or 4 months on inventory on average. And so I want to take a look at how that's going to affect prices because look, let's face it, you know, when you look at the consumer right now, I don't think the average consumer in the U.S. is as healthy as they were a couple years ago. You look at increased revolving debt, which is really going through the roof. You have a lot of people that currently do over the last couple of years have bought with higher rates, really hoping that rates will fall. And at this point, they definitely haven't. And you just have unemployment actually staying pretty good, but there are a lot of other factors like inflation and things where people just feel poor regardless of their income, and income hasn't actually went up. So when you look at the consumer, I think the consumer is not as healthy. And then you have like the housing inventory with building inventory. Is that the perfect storm? Hey everyone, this is Rayce Robinson, your favorite Florida mortgage broker. And I was around in 2008 when we had the biggest market correction of all time. And it was an eerie time. I mean, I went through that and there were homes on the market all over the place. Foreclosures for me personally, it was very tough because I was in the mortgage business. Lots of people, unemployment, all these things were crazy. And there are times when I look at the market now, I definitely think like, could we have some kind of event, especially obviously here in Florida where there is building inventory. So let's look at those numbers. But first let's look at rates, because the number one thing that is really, diminishing the amount of buyers that want to buy is rates, right? So goes the payment, so goes the market. And rates right now at this 7.34%, this is nationally. Remember, everyone's rate's different. You can buy it down. You can have different credit scores. But I like looking at this chart, and right here you can just see we hit this high. We cannot bust through this 7%. Every time we went straight back up. So recently we had a little dip in rates and shot right back up. And that just is showing that the market is still pricing in the threat of inflation, that the Fed is going to not cut rates as fast as everybody would like, at least in the real estate business. And if you're a homeowner or a home buyer and you're listening to this, lower rates is kind of a double-edged sword. If rates drop, which at some point they will for sure, I believe that by the end of next year, rates will be a lot lower than where they're at now, by 1% or so. But again, nobody knows. Everybody thought rates would be lower than now. But as those rates fall, that is going to push all the people that are waiting into the market. Most people that are not buying because the payments are higher are not saying they're never going to buy forever. They're just saying that they're going to wait until the payments get to where they feel like they can afford. And lower rates will bring lower payments, and it will bring buyers. So as rates stay higher, you're going to see this building inventory. Now, what does that ultimately mean? This article is talking about Florida's housing market under the microscope. Is the surge in inventory a prelude to price corrections? And they show a difference between condos and single-family homes and talk about where things are down. But when you look at here, there's a couple interesting charts here. So this breaks down a lot of different areas all through Florida. You can see right here, this is the shift in price change since March of 2020. So for instance, condos in Punta Gorda are up 54.8%. What's more interesting to me is how prices are down from the peak, meaning in 2022, when prices kind of peaked before rates fell, are we down off of the median price? And when I look here in almost every market, even if we're down, it is really, really, really small. And even Orlando for condos, a 1.8% difference. And then when you look right here in as far as single family homes go, I thought this was interesting. Look at Orlando, 0% change from when the actual price, the market started to turn with higher rates. That's important because, look, we had 8% rates, big slowdown in transactions, really every imaginable thing, and yet prices stayed resilient, and that's because there was such low inventory. Now we have the situation where rates are higher. They had come down a little bit, but now we do have a fair amount of inventory compared to what we had in 2022 and 2023. So that's why you have people thinking about, could there be a major price correction? As a mortgage professional, I'm pre-approving people every day, and there's so many people say, well, we're going to wait until prices fall. I've been hearing that for the last few years, and that hasn't been a good strategy, and I don't believe that's a good strategy going forward. Now, I have made the case many times with people, prices will fall if we get enough inventory, but how much inventory would we need for home prices to fall? I personally like to look at historical data to kind of see what happened in 2008 and where are we at now compared to then, especially here in Florida. This is one of my favorite charts to look at. This is the 20-year history of Orlando that starts back in 2005, and we're going to take a look at some key data. Interest rate, what the median price was in 2005 was $193,000. I would definitely like to buy some houses at those prices. Average days on market, and more importantly, inventory, months of inventory, and how many homes were on the market. So we're going to kind of look here. So let's start in December of 2007. So this is considered really when the Great Recession started. And so really the beginning of 2008, December of 2000 is technically the official date. But I want to back up and come back to that date. So you can look here all through 2006. This is median price continuing to go up throughout 2006. But this is where inventory first really jumps up. 2005 to 2006 went from 9,900 homes to 12,000 months of inventory jumped, doubled almost from 3.5 to 6.27 months of inventory. And you can look throughout 2006, this inventory is continuing to go up, months of inventory continuing to go up, average days on market continuing to go up, but also going up median price going up all throughout 2006. Meanwhile, rates actually fairly high, historically from the mid to low sixes of where they had been. Now let's look at 2007. 2007, I was working that year. It was a good year. Actually started out as a good year. So we jump up to 21,000 homes on the market, 15 months of inventory, and median price still hanging in at 250,000, median price hanging at 250,000 with about 14 months of inventory. And you see right here, pretty much in August or September, median price finally starts rolling over, and you can see the big drop all the way down to 167,500 in December of 2008. But in December, let's call it September of 2007, this is where really days on market and median price caught up with demand and all these things, and the craziness that was going on during that time. Banks were imploding, and really we got this big market correction. We had all these people with adjustable rate mortgages, a lot of bad mortgages done with lower credit scores, and people that weren't really qualified, that really led into this explosion. Remember, no one had any equity at that point. The whole market, for the most part, was underwater. Fast forward to today, when we look at the numbers, right here is the current month of April. We currently have 3.4 months of inventory here in Central Florida. We do have 9,367 homes, and you can see how big of an increase that is from the 2,000 that we had in January of 2022. But at the same time, we have days on market at 3.4 months, and we, again, only have 9,376 homes on the market. All that to say that the likelihood of some 2008 event happening, regardless of the YouTube videos and all those things going on, is just not likely in the cards. But that's what the numbers say. So what would I do with this information if I was a seller? No reason to not sell. There is, if you can hold on to your home, houses will continue to appreciate slowly, I believe, over the next 3, 4, 5 years. But remember, when you sell your house and buy another one, you're also paying a little more. But if you're a home buyer and you're watching this, get off the fence, so to speak, because there's incentives right now. The market, what the higher inventory does, makes the sellers more able to help you with closing costs and things that hadn't happened for years. It is absolutely becoming a little more of a balanced market. We're not quite there. Freddie Mac says we're currently 1.5 million homes off of a balanced market, but we're definitely headed in that direction. But as soon as rates go down, when that happens, the inventory is going to go right back up as everybody jumps in the market. I'm sorry, inventory is going to go down as everybody jumps back in the market. So that's what the numbers say. We're going to keep looking at unemployment, CPI, which is inflation, interest rates, and inventory, figure out what the health of the market is. What we need to be doing as real estate professionals or home buyers or homeowners, and as more information becomes available that moves the market, as always, I'm going to cover it right here. If you have any questions on this or anything else, reach out to me. Lots of great loan programs. Remember, we have no lender fees. Get you the best deal on the mortgage. Reach out to me. I'd love to help. This is Rayce Robinson, your favorite Florida mortgage broker. Have a great day. Talk to you soon.